And here we go. Welcome back to Stacks at Bat, the numbers. Friday afternoon, coming to you a little late here, but I wanted to do a nice update on a great stock we've been keeping an eye on. We were talking about 5, 7, we might see 10. As we see, we're continuing to hit these highs. So let's get into it. Let's see what we see in some of the technicals, and we'll rehash some of the numbers, and I'll give my opinion on what I feel should technically maybe be your play of action if you potentially miss this one, and or maybe just found the channel, just found the stock. Name of the company we're looking at, The Honest Company Incorporated, ticker symbol HNST, listed here on the NASDAQ. Again, there's a company that does baby wipes and whatnot. Numbers have been growing very nicely. We recently got earnings. I said, in my opinion, stock can hit new highs of 5. We saw the pop up to 5. We were looking at the numbers saying we can keep going. Stock might be worth $8, $10 a share. As we see new 52-week highs, yet again, it continues to surge off of this recent impressive earnings report, and we'll rehash that as well quickly. 691 on the close, up 41 cents, 6.33%. After hours now, up over 7 as well. 7-Eleven up 20 cents, almost another 3% after hours. As you see, hits a new high today of $7.14. Again, I believe originally brought to you on this channel right back here maybe at about 2.5. So you're approaching roughly 200% gains just inside of about 6 months. And also, because you have a very cheap cost basis, we spoke about this in the last video, that if over the years now the stock climbs up to 12, 15, 18, what's going to happen is off of every earnings beat, you can see a couple of dollars pop, and also off of positive catalysts coming out, like analyst upgrades and, price target increases, new deals signed or whatever. We know that all of those catalysts and headlines could help pump up a stock, 5, 10, 12% or something off the news. So if you got in at $2.5, $3.5, $4, and now you're up at $16, you get a positive announcement, the stock jumps to $18, $19. This is what we talk about when we talk about buying a company with strong fundamentals for a very cheap, undervalued, or even fair valued price if you have to, and then you just lock it up and go for the ride. Because what happens is, as it exponentially starts growing, you can see you've already now, if hypothetically you got in here, again, you've already compounded your principal 2x. So just imagine how much more wealth could be generated 2-3 years down the road if this stock eventually gets to $18, $21, $28 a share. So that's why I stuck with something like HNST. But we looked at it initially here at the wedge, 2.5, boom, it pops up to 4. I did an update video talking about how awesome we are. Then the stock pulls back, bounces back above the 20-day, essentially goes in the same exact pattern as we saw here. Descending wedge, spoke about that, 330, boom, stock jumps up, hits almost $5 going into earnings. Look at this beautiful earnings beat. Company actually ended up bringing in, I think, about like 160 grand or something in profits. And Wall Street was expecting a loss of 2.5 cents. And this is why I spoke highly about it as well, saying that over the next 1 to 2 quarters, if this company is able to post EPS positivity, that is more than likely going to drive the stock up even more. So overall, in my opinion, I think even giving something like this a $10, $11 price target, I think that's actually still conservative. And if markets remain strong and we begin to really reward not only fundamentally sound stocks, but more importantly, domestic fundamentally sound stocks, then yeah, something like HNST, I mean, you might see $12, $13, $15 a share now down the road. So that's why, in my opinion, I do still like it. And the numbers were growing nicely, but new 52-week high. And again, I wanted to look at the technicals, but we'll check the numbers very quickly. Market cap about 700 million now. We can see the EPS getting closer and closer to flatness. EPS estimates, as we see, beating now for the last 4 quarters in a row, and estimates also jumped up. You can see we went from big negative here, -8, -7 cents, climbing up to -4, -2, and of course next quarter also -2. But depending on how much revenue the company brings in, we might see another flat EPS report. So we'll see. But you can see that, again, even as the estimates got tighter to flatness, the company was able to deliver. And if we look here over the quarters, we can see, look, 86 million revenue, 90, back to 86, up to 93, up to 99. So we are, excuse me, essentially on the up and up. And of course, over the years, we're seeing the same trend as well. 235 million back in 2019, 300 million, 318, slight dip to 313, and now up to 344 to close out 2023. And for 2024, we may see again, we may see 350 million plus, and of course this net margin percentage of minus 11.33% is going to improve even better year over year. So we have that to look forward to as well. But we'll crunch some numbers real quick. But I know I'm coming to you late today. My apologies. I had some family over, but I know it's Friday afternoon, and I personally, we got some fights this weekend that I'm looking forward to. Can you believe? Did you ever think that in 2024? We'd be saying that, hey, are you ready to watch the Mike Tyson fight later? That is happening. That is happening. And I know whether you're into boxing or you're not into combat sports or anything like that, just think about that. 2024, we got Mike Tyson fighting. Wild. But here we can see debt 29, 27, 25 down to 23, right? So just over the last 4 or 5 quarters, debt went from almost 32 mil down to sub 24 million. So we have brought this debt down essentially roughly 25% of what it was just about this time last year. And again, technically, of course, you can speak to business owners down in the comment sections. When you have, a healthier and healthier balance sheet, and you can see things like your free cash flow is improving year over year. Look at the cash on hand actually improving as well. The blue bar here, 23 mil, 32, 33, 36, over 50 million. So again, what you're seeing is a very healthy business on the up and up. Slowly paying down the debt. Essentially, that's probably going to get down to zero. Free cash flow is improving. Margins are improving, whether it's gross margin percentage, operating margin. They're all essentially on the up and up. And of course, your cash is up, technically year over year, your cash is up over 100%, more than double what you had on hand this time last year. So that's why really, pretty much any way you look at this stock, I personally do like it. And unless it just went on a massive run like it did, and you're expecting a little bit of a pullback, that is probably in the moment the only way that I would agree with this stock going lower, right? Small correction that we need to take in the technicals, we need to readjust the RSI, and then chances are, unless markets really chunk down, we'll probably continue to bounce and step up higher. So that's why something like HNST, this is one that I liked in the numbers, and I said that, when it does go quiet or it goes red and it's not really being talked about, that's when, in my opinion, you start to look at it, you start to piece your way in, because it's basically only a matter of time before it begins to step up. We have assets outweighing liabilities in both the short and the long term. Our equity was up here above 140. We can see drop down to 120 and has now been on the up and up for the last 5 quarters in a row, roughly. Equity back up to about 134 million. We can see the book value as well drop down from over 1.5 down to about 1.25, but has slowly been stepping up now over the last 4 or 5 quarters in a row, back up to $1.32. Looking at it directly as at that specific metric, where we can say we're trading, roughly 5+ times book, that may be, again, one of the few fundamentals to where you might be expecting a little bit of a pullback. But in my opinion, I just really don't think that argument holds much water here with HNST. But, okay, debt 23, cash 53. So that's plus 30 million. We come over here to equity. We have 134, we'll call it. So that's 164 million. And we come down to last year's numbers, 344, lost about 40. So let's just call it like 300 million, I guess. And we were at what? 164. So now we're at like 465-ish. 465 million, quote unquote, fair value, in my opinion. Current market cap after the surge, still only 700 million. So that's why if we simply do a 2x multiplier of our quote unquote fair value, we're talking about like 950 million to almost $1 billion. Which of course would technically be about another 40% run, roughly, from this current level. So that's why I'm saying, in my opinion, I think we still have like 3 points roughly that this stock could run up. And you can see a 40% gain. You could probably see a $10 stock sometime soon, believe it or not. But again, that's just my opinion. As I always say, if you guys see something different in the numbers that I'm kind of glossing over, if you see something in the technicals that might indicate we go on a big sell-off before we eventually have that big bounce back, as I always say, you guys have carte blanche in the comments section. You can drop anything you see, anything you're keeping an eye on. But again, less than 2 times sales, technically less than 5 times book, right? I thought it was above 5. 24 times cash flow, but we see also that the cash flow seems to be significantly improving. So, that's slowly going to come back down to earth, probably even if the stock goes higher. Our return percentages, look at this, almost back to flat. Gross margin percentage, look, back at 27, almost 28% gross margin. Now we're up to 37, 38, almost 39%. Operating margin, minus 7%, minus 11%. Slowly gets positive, goes back negative, boom, last quarter up above 4%. So this is what I mean. All of the main fundamentals of the business are improving significantly well over time. And that's why I say, unless we get some big negative announcement from the company, then chances are we're probably going to be headed on the up and up with HNST. EBITDA turned positive, almost 5%. Net margin, slight positivity, 0.17. And we can see we're bouncing around now, going from positive to negative. But again, looking back where the company came from just within the last year, 2 years, you can see that these metrics are improving very nicely. Inventory turnover now up to above 3. Asset turnover, again, the amount of revenue the company is able to generate off of said assets on its balance sheet. We can see that over the last roughly 18 months, the asset turnover is up 50%, going from 122 up to 182. And of course, we're seeing the debt slowly being paid off, and things like our equity and our assets continue to slightly creep up. So that adjusts all of our debt to asset, debt to equity, and long-term ratios. All of these, you can see, are slowly ticking downward, which technically is a good, healthy, fundamental sign. Earnings, look at this. Again, EPS was rough, slightly wider losses than Wall Street expected, which is probably why they were keeping the stock down between like $1 and $2, and it never really gained any momentum. Then all of a sudden they start to beat on EPS, right? So it looks much more attractive. Here this quarter they actually went positive, and even here you can see, look at that. Again, almost posting flatness. They were supposed to lose 7 cents, reported in line, and then of course last quarter expecting to still be at a slight loss, and they come in flat. So that's why now it seems like we've really turned the corner here. And the random recent bump ups in revenue that we've seen, going from low 80s up to low 90s and even almost 100 mil, we can see that may have been the tipping point to where now that extra $6, $7, $10 million in revenue is enough to completely put us over from the red to the black. And now the business is going to grow, even better. So that's why, again, in my opinion, I like something like HNST. And we can see that we're projecting moving forward to maintain this 90 million milestone mark, expecting here to get back up to almost 99 mil. And then we can see, and again, the company may come out and beat estimates. We just saw them beat estimates here on revenue by 7 mil. So if we see another beat similar to that by another 5, 6 mil, then we're technically going to break above 100 million in revenue next quarter. So that's why, again, I feel like we could be right on the cusp here. This quarter, next quarter, we could be right here, ready for the stock to break up even higher and take that next leg up to $9, $10 a share. And of course, EPS positivity will definitely help that situation as well. And over the years, we can see, look, for 24, we're expecting high 300 millions, good year-over-year growth. And for 25, almost 400, above 400 in 26, almost 450 in 27. So that's what I mean. Are these percentage growth increases year over year, are they groundbreaking? No. But what do you like to see? You like to see steadiness. You like to see consistency. And regardless of whether these are large percentage growth year over year numbers or not, it doesn't matter. If the company is able to go from 375 to 398 and beat that, up to 422 and beat that, right? If we're consistently seeing the business growing, it should technically only translate to up and up moves for the underlying stock as well. But in the technicals real quick, if I personally just found my channel, didn't know about HNST. Someone mentioned it. Oh crap, the stock's up huge. It's at new highs. Do I buy it here? In my opinion, I would not. In my opinion, I would not, only because I think that if you're just getting to the stock, you can probably get a little bit of a better entry. And in the technicals, we can see we recently gapped up. You can see the high here, top left of the screen, the O, the H, the L, the C, you open the high, the low, the close. You can see the high 504, next low on the candle 541. So we have about a 35-cent gap up right there. And technically, even if we only fill about half that gap, you're looking at about 5.25, potentially lower. So in my opinion, if markets don't chunk down too much, could it completely gap fill and you can get the stock in the very low fives? Technically, yes. However, realistically, again, we know that nothing is guaranteed. And even when we go back and look at a chart like Tesla, I mentioned that we had the gap filled down, again, don't quote me, like $81, $84 a share post-split or whatever it was. I laid it out in a previous Tesla video. But in my opinion, right, the rule used to be, oh, gaps always fill. So if the gaps always fill, that's why when they were bringing Tesla down, I thought it would keep going and just fill that gap and then bounce back up. But it technically never did. So that could potentially still be on the table if we get some bad news coming out of Tesla. But of course, it would have to be some big negative headlines. But you understand my point. But something like HNST, again, could we technically gap fill back to 5? Yes. Realistically, in my opinion, maybe coming down right here, like 5.75, and you can see even the top of this candle here is about $6. So in my opinion, that might be the pullback. I'm not exactly sure if we'll see 504. However, I will say this. Markets have been chunking down, and reason being, in my opinion, is because ever since we got closer to the election, and now we have a Trump victory, we see that we're going to probably, build back America better and make America great, and we're going to shift more of manufacturing and overall production and services back here domestically into the States. So what's that going to do? That's going to strengthen the US dollar and technically should actually see bumps up in our 10 and 20-year yields. And we know that usually the rule is, as the dollar gets stronger and as our yields go higher, technically stocks are supposed to sell off. So while overall, looking at the broad picture, if you were to analyze the USA, technically someone like Trump, who's looking to implement all these policies, yes, it technically is good for the country and our economy. But the difference is, will we see that immediate translation into the stock market? Because remember, the stock market is kind of like its own organism. And again, in my opinion, because we may see a stronger dollar and higher yields, we may actually sell off and give back some of these gains that we falsely saw, in my opinion, over the last 3.5 years. We may start to go into this 10-15% correction that we've been kind of looking for the last 12 months. We may get it now over the next 12 months. So if that happens, then yes, of course, something like Honest could, of course, fill the gap and come back down, who knows, here to 380 or something. You might get this stock on a massive sale or something. But remember, regardless of what is affecting stock movement, and regardless of what may sway you out of a company in the long term, if you're looking at this as investing into the actual business, then as long as the business remains financially healthy and consistently grows, you should technically really have nothing to worry about. That, in my opinion, is the way I would look at the overall situation. But in the technicals, again, potential gap fill here to 504. It looks like if the 20-day kind of goes on the up and up here, that's why I'm saying if it does pull back, you might not see the gap fill, and you might see a pullback here to like 540. Or, meet up there at like 580, 575, and then it'll bounce and go higher. But technically, in my eyes, I think traders might just be waiting for the RSI to adjust. And let's switch over to stock charts and check it out, because we can see that the RSI has absolutely exploded for HNST. The stock broke clean out of these Bollinger Bands. I mean, we don't even have a trumpet, really. This is almost a 90-degree angle straight up and down here on these Bollinger Bands. But we know that that'll eventually curl and start to come up, and that's why if this starts to chunk back down now, coming back down to earth, this top Bollinger Band will curl and flatten out and come down to meet up back with the stock here, as it was over here and, here and here. So we'll see. But in my opinion, I am expecting a pullback. RSI up here at almost 89.5, staying above that 70 benchmark, basically since going into earnings and coming out of elections. So that's why HNST might start cooling for a little bit. And top Bollinger Band 629. That's why a pullback to 6.25, potentially $6, could really happen almost overnight within a day or two. So that's why. Do I still like it? Absolutely. If I just found the stock, would I jump in right now? In my opinion, no. You'd probably easily be able to get this for 10-15% cheaper, in my opinion, if not more. If not more. But mid-Bollinger Band curling up now, it'll reach 4.5-ish maybe on the up and up. It really shouldn't drop back down to that level, but we can see our moving averages slowly and steadily climbing up. Slow and steady wins the race, as I always say. Now we have moving averages at 3.5 and about $4 a share. And remember, just a couple of months ago, stock was down at 2.5. Now we have moving averages at $3.5, $4. So that's why, again, I like to look for certain things, and you're starting to see why over the years. On the weekly side, same thing. We have RSI technically overextended, and we can see going into the tail end of last year that we had, some decent bumps come into the stock, and we really went on a tear going into the new year. So, of course, anything can happen. However, look at the volume up here. I mean, that is significantly more than anything we've seen over about the last 2.5 years. So people really jumped in, and we really just exploded this stock up and took it even out of tech analysis ranges and indicators, and just pushed all that to the side. So can it keep going? Of course. If it pops up to like 735 Monday and hits new highs, would I be shocked? No, not really. But again, at the same time, I would be expecting a pullback. Top Bollinger Band on the weekly, 555. So again, we got the gap fill, 504. The bottom of the gap up, 541. Weekly Bollinger Band, 555. Right? In my opinion, that's what I'd be looking for. I'd be looking for about 5.5. But I will say this, again, as we started pulling back, again, RSI on the weekly, 78.25, right? So we're technically overextended, even though MACD just crossed to the upside. That's why. Could we keep going and hit 7.5, 8? Yeah, we could, but then it'll most likely give back a lot of those gains, in my opinion. And also we can come back even here to these previous highs, which as you see is 489, but that's technically lower than the gap up. So that's why if we do hit kind of the quote unquote low of the lows inside of the next couple of weeks on a pullback, the low of the low technically shouldn't be lower than 504. But I would say as we approach the low sixes, which would be roughly a 10% sell-off from now, back to around that 620 level, that Bollinger Band we were looking at, that, in my opinion, is when I would begin to piece my way into HNST. And then, of course, as we say, if I liked it at 620 and they bring it down to 530, I'm going to like it even more. And boom, I'd add to the position even more. So I wouldn't go all in here at around 7. I would definitely wait for a pullback. Excuse me. And you can see that the RSI on both the daily and the weekly time frames are potentially a little overbought right now. So that's why I think traders, they had the big pop. They made great profits just in the last week or so. And now you're looking for everyone to potentially get out, book the green, and now wait for it to sell off, come back down to earth, quiet down a little bit, and then boom, everyone's going to step back in and take it on the next step higher, right? Because again, since the end of 23 into 24, you can see we're up and up, we step back, and then we step up, and then we step back, and then we step up, and when we step back, and then we step up. You understand? So that may be coming as well. And also, quickly at the pivot points, I'll let you go because I wanted to show. Okay, if we look at previous pivot points, because technically we're above the top one on the weekly here of 539 and a third. We're well above that right now. But we can see this weekly pivot point right here is 677. Stock started to pull back to sub 7, but then ran up after hours. I'm lagging because of the video streaming now on the right side. But we can also see, look at this next breakout level. If we go back to 2023, look at this top line resistance on the weekly, 1044, which is why I'm saying you may see an adjustment back to 6, sub 6. You could see 5.5. You could see the 504 gap fill. But then after that, you may see 10 plus. And not only did I make my case in the numbers, but now even looking on the technical side as well, you can see we have certain levels that we were watching around that $10 mark. And of course, it's a key psychological level as well. So that's why I do think that this stock eventually does get to that 10 mark sooner than later. But if we look back even on the daily and we look at previous pivot points for the previous months here, you can see we have one right here at 601, which incidentally is right at the top of the body of that candle. Look, where did it close on November 13th? 601. So in my opinion, that is going to be the mark, which is why, again, I say if I start to see a sell-off as we approach the low sixes, that's when I'd begin to start piecing my way in. If it bounces, I made the right call. If it breaks, I could always buy more. Hopefully you're in that type of situation. And we can also see back here, if we look during the month of September, if we look at this top pivot point, you can see it's right about 582, it looks like on my screen. And if we come over here at the bottom of the body of this candle on November 13th, you can see, look at the open, 579. So that's why that may be the range to where this stock pulls back to almost immediately, between about like 580 and $6. So that's why I'm saying as soon as I would personally start to see it approaching that $6 mark, in my opinion, that is when I would personally buy it. For the record, I have no cash to do this. I do not have a position in HNST. But that's pretty much it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Enjoy your weekend.